Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. I wanted to talk about the best free resource you can use for Bitcoin trading, investing, curiosity. I don't know if most people are like me, but I just like looking at the on-chain activity sometimes. It's pretty cool data. So for this tech teaching session, let's talk about lookintobitcoin.com. Not a sponsor. This isn't an ad. They just have really good data. They have an alert service if you want to sign up for it, newsletters, etc. They also have a YouTube channel where they explain everything on their site. I kind of view Look Into Bitcoin as a more approachable Glassnode type website, more approachable coin metrics type website, where they break down these metrics for you. Philip Swift on Twitter, he's the head of Look Into Bitcoin. Give him a follow as well. So if you're new and you're wondering, where do I go? What do I look at? TradingView is too confusing. I just want to bookmark something and check it every other week. I don't really care, right? This is the type of info, in my opinion, that is extremely valuable for those types of people. I even use this regularly to check all sorts of stuff. So they've added a ton of stuff since this website first launched in 2018. And let's go over some of my favorites, some of what I think are most valuable. I mean, one of the best tools that you can use, period, end of story, is this 2-year MA multiplier. I've talked about this a ton. I think one of the first times I've seen this, or I saw this, was lookintobitcoin.com. Just a keep it simple, stupid type of indicator oscillator, looking at the 2-year moving average and then the multiple, which would be 5 times the 2-year moving average in the red there. And I like things like this because I don't have to think, okay, where's the entry? Where's the exit? Are we bullish? Are we bearish? In 2 seconds, at any point in time, you can look at this and say, oh, okay, we're in the accumulation phase. Or in 2017, we were in the overbought phase, right? This will help, especially during mega euphoric, mega bearish periods. Is it going to help you pinpoint to the penny the exact top and bottom? No, but it'll give you some sense of where things are at now compared to historically, compared to the moving averages, that sort of thing. One other thing to notice here, in the 2016 and even the 2020 periods, the multiplier, the ceiling, if you will, kind of dips down a little bit like we are now. So it's not anything to be worried about long term because this is a dynamic range, right? It's going to move up over time, assuming we go higher. And, you know, let's say this time is different. We've got an ETF coming online eventually, a spot ETF, and maybe all the data everywhere gets blown out of the water. We'll see. But I tend to doubt it. You know, this is something I think you can trust years from now, okay? Anytime you introduce something new into the system like a spot ETF, that will disrupt the equilibrium of how this data has reacted historically. But, you know, if we're at 250K in 2025 and we're looking overbought, I always screw that up, overbought on something like this, I'm getting nervous, right? One other great thing about this website is they break down, you know, some of the description and thought process behind when and how to use these indicators. So that's the 2-year MA multiple, 200-week moving average heat map. Another great one to keep you out of trouble on the bullish and bearish side. So if the 200-week moving average is moving up very quickly, as indicated in the colors here in the red, then that tends to indicate, you know, euphoria type conditions, right? You can see in 2021, we didn't quite get there. And if I had one suggestion for them, it would be to readjust some of these colors to be a little bit more sensitive, maybe, just because it's not really quite binary, even though it looks binary. Anyway, that's just my own little quibble. But so there's 2 ways you can use this. The speed at which the 200-week moving average is increasing or decreasing. It's never really decreased. And the second thing would be the distance from the 200-week moving average. Historically, we've never really stayed below the 200-week for a very long time. And we've also peaked price-wise at a pretty far extreme away from the 200-week. So, you know, if in 2024, we're at 175K and we are looking extremely overbought, right? To me, that's an indicator to be careful. Another great thing about this site is you can use similar indicators for anything, right? We can use this for ETH, we can use it for the S&P, but I think for the newer folks especially, it helps you understand what's out there, what's even possible, right? and explains a little bit behind what's going on. So in the current state, 200-week moving average looks great. 2-year moving average multiple looks fine. Here's another one that for most people immediately, they have a visceral reaction. Now, I don't necessarily agree with stock to flow at all, okay? But what I do like about this specific chart is the days until having colors here that they have on the labeling. Now, they have the stock to flow, which is just a loose approximation. I don't even know how to say it correctly. A model, I don't know, whatever you want to think of that as. For price based around, the halving and whatnot. But what I really like is the days until halving stuff, because that gives you a good sense of where we are at in the cycle relative to halving, regardless of the stock to flow. So this is one of the things I just, randomly look at sometimes. I like visuals, I like colors. And of course, they explain stock to flow, and I'm sure there's something about Plan B down here, who was the originator, I believe, of stock to flow, who made it famous. Rainbow price chart. Now, you've certainly seen several different versions of this out of me. This rainbow price chart was started a long time ago. I think they even probably list it down here. Maybe not. Usually they say like when the indicators were created, but this was a Bitcoin talk thing, I think. So years and years ago, this got created sort of as a meme, as a joke, but in reality, it does a pretty decent job, has done a pretty decent job. Anything that can nail the COVID bottom, nail the 2016 bottom, thus far, nail the FTX blow up post 2022 bottom, that deserves attention in my book. So again, much like the 2-year moving average multiplier, it sort of illustrates overbought, oversold conditions, better times to DCA in, better times to DCA out historically, right? Are we bullish? Are we bearish? Are we on a rate of change that's sort of expected? So power law corridor is similar to this, pitchforks are similar to this, but again, another no-brainer, easy tool to just check out once in a while. Fear and greed index, this has origins in the equity side. I'm not a massive fan of this, but I know people like looking at this occasionally. Anything that basically doesn't tell you anything about the market, right? We can stay greedy for a long time. The markets can stay irrational longer than you can stay solvent, sort of thing. Markets can stay bearish for an extremely long time. I remember tracking this throughout mid-2022, thinking, okay, we're on the fearish side over and over and over again, fearish, whatever, and it just didn't matter, right? We still really haven't flipped too much on the greed side, but this is more just like a fun sentiment thing. I don't really use this for anything personally, but I can see how potentially somebody might find it valuable. It's fun to look at every once in a while. Pi cycle top. This is a very interesting moving average cross that's back tested, and that's probably why this even exists. They go into it down here, created by the founder himself. But what you can do is you can back test a bunch of different MAs and MA multipliers, and look, is there anything that has pointed out the exact top or bottom historically? This, as it says, is a cycle top indicator. So as much as I said back in the day that this was the only indicator at that time in 2021 that was signaling the top, literally the only thing, other than maybe the cloud, maybe an ascending triangle breakdown, rising wedge, that sort of thing on the chart. This was really the only indicator that was correct and has been correct. I think they even say within within 3 days. So it's a data point, right? It's not necessarily investment advice, but again, if we are at 175, 250K, whatever the price may be, and we get this cycle top cross, I'm going to pay attention this time. I didn't last time. I did end up getting out a little later than the cycle top just based on the cloud, but this thing has an excellent hit rate historically. MVRV, now we're getting into the more on-chain side of things. There's lots and lots and lots and lots of on-chain data you can look at. Again, interesting. If you're curious, it's there. But to me, as a trader, most of it is useless. Most of it is not very helpful. It doesn't really help me make my trading decisions. Now, NVRV, on the other hand, has historically helped find tops and bottoms in the cycle. Okay. Intra-cycle, maybe not going to help you too much. But what we're looking at here is the market cap against the realized cap, which would be when coins have last moved. So it kind of looks at unrealized profits or losses, right? Because if the realized cap is 8x the market cap, that says there are a lot of coins that haven't moved yet that have unrealized profits. And the same thing on the flip side, if realized cap, this is a z-score, so it's not, exactly the multiple, but if the realized cap is 0 or negative relative to the market cap, that means there's 0 unrealized profits relatively or negative realized profits, right? So again, in 2 seconds, we're just looking at, does this help you in any way at all-time highs? Does it help you intra-cycle at the bottom of the cycle? For me, that answer is yes. It helps at the bottom. It helps at the top. It says when all of the leverage is washed out of the system. It says when we're getting started on the cycle, we can compare the z-scores to previous z-scores. We can look at the days that we've consolidated, right? All sorts of fun stuff. And they go into that more in the explainer down here. But once again, if we are above 7 on the z-score at some potential all-time high, right? For me, that's a pay attention indicator. And certainly something I watched like a hawk at the bottom because it felt like we were bottoming. And the z-score on the MVRV definitely agreed with that in the early stages of the beginning of the year, as well as, the end of 2022. So from a position perspective, this looks great to me as far as an early cycle pre-blast off sort of range where it's sitting now. Here's another version of that. Depending on how you want to think of this, I always think of it as unrealized profit or loss just in my head. But to look at that a different way, this is a different version of that sort of adds some labels as far as capitulation, greed, euphoria, anxiety, that sort of thing. Personally, I like MVRV a little bit better, but some people may understand this form of it better. Again, showing currently that we are in a decent spot relative to historically when we've reset post-capitulation, in the early stages of a bull market. So MVRV is just easier for me to understand. NVT, this is a Willy Woo indicator that historically over time has become less and less valuable. You probably need some sort of z-score on this. I've played around with z-scores relative to halving periods on things like the Metcalf indicator, Metcalf multiple, however you want to think of that, which has looked pretty good. I haven't seen anybody do that in the data yet, but I do think you need some sort of data massaging on this. They even mentioned that here, that as more coins are held off-chain or just don't move really, it's hard to look at NVT and understand what you're seeing because you're looking at market cap against transaction value. So Bitcoin's not really a heavy transactional network on layer 1. Maybe future versions of this would implement something on the Lightning side. I don't know, it's tough. It's hard to compare Lightning to layer 1, but I don't look at NVT at all anymore. I just don't think it's too valuable. You can sort of see the trend line over time here rising. So I do think there's potentially something to be used here. It's just I prefer MVRV over NVT at this point. For this reason, the data is just too kind of all over the place and noisy. But it's there if you want to look at it. POEL multiple, very similar to MVRV in my eyes. Looking at, in this case, how rich are the miners today versus the past year. If the miners are making bank, their multiple is super high, and they are more likely to sell. This is all miners in aggregate, not necessarily the industrial miners. Those we can sort of see these days if they're selling or not. But the more miners are fat and happy, the more likely, in my opinion, they are to sell, and the more selling pressure that would have on price, right? Now, when miners are in distress, when miners are shutting off rigs, when they're going through hell, basically, that's typically where we see a bottom in price. You see less selling at the very, very end, right? You're seeing some capitulatory type behaviors from miners throughout the bear market because historically miners haven't had someone trading their stack on staff or something like that. And they've just been terrible traders historically. Less so over the past couple of years, but definitely in the 2018-19 periods, just some real sell the bottom type behavior from miners. That's not a slight. That's just, that's what we've seen. We've seen them selling the bottom a lot of times or being hedged in the wrong direction, whatever. So much like MVRV, this is a good indicator to look from an oscillator perspective. Are we overbought? Are we oversold? Right? Just in your head. That's how I think of it. Are the miners fat and happy? Are they terrified, thinking, what have I done? Right now, they're basically in the middle. I think they're set up pretty well. Miners generally for the halving. It's certainly going to hurt many miners on the lower efficiency side of things. Ideally for them, energy costs get cheaper, which is a bold prediction, but ideally that's what happens. Ideally ASICs get more efficient, that sort of thing, but their break-evens are going to double effectively, right, on their post-halving metrics. And you can see the halvings here, the big drops in the Puel multiple. So in April 2024, the Puel multiple is going to drop pretty significantly once again. HODL waves, this is even more kind of direct on-chain behavior. This is looking at coins and the last time those coins have moved. Coins that haven't moved in over 10 years, potentially lost, right, are in the pink up here. Pink, purple, not pink at all, actually, it's purple. This is more pink, red at the bottom. And again, one thing I'm looking for here is what do the on-chain behavior holders coins sort of show you at tops and bottoms? Generally at tops in the market, we have seen a reduction in these sort of medium term-ish holders, sort of signaling that they're cashing out, right? A different way to look at this is back to the realized cap, kind of just puts a Z-score on it and it makes it fairly obvious what's going on. You know, when you have a lot of trader type activity, when you have a lot of tourist activity, I think is what it's commonly referred to, that tends to be the top in the market. And when you have a lot of holding, when you have a lot of coins aging into those older bands, typically that's during consolidations, during, you know, post bottoming of the market, right? And that's more of the type of behavior we're seeing now. So on-chain activity looks very good, setting up for a run here into 24 and 25. Addresses with specific balances, also, again, not too useful to me from a, you know, telling me what exactly to do trade-wise, just sort of more of a curiosity and interest. Addresses with greater than 0.01 BTC continue to rise, over 12 million now. Addresses with at least one Bitcoin, over 1 million now. And you can see a big jump in those addresses after the FTX collapse. One thing I haven't talked about, on all these charts, you can zoom in, just dragging your mouse and looking at that specific time period. So this tells me we're continuing to see moves to self-custody, most likely, diversification of custodians at the very least, and accumulation. So again, that's a good picture for a long-term rally. On the mining side of things, they have some data too, hash rate, which, you know, again, isn't going to necessarily tell me anything most of the time. In and of itself, it's more of a network security question in my eyes, between hash rate and miner revenue, fees versus rewards. Over time, we certainly need to see the yellow section pick up here. That's the percentage of fees relative to rewards. We saw that in a big way during the ordinals mayhem, which has pretty much died down at this point. But half the battle with some of this data is just knowing that you can find it in a certain spot, you know. So they do have this data. Hash ribbons are interesting. Hash ribbons look at the 30 and 60-day moving averages of hash rate, kind of looking for minor capitulation or minor stress. You can see during bearish times or pre-breakdown even, we've seen the hash rate ribbon cross and then recross. So if I'm looking at anything relative to hash rate, as far as with some sort of trading mentality, this to me is more valuable than just hash rate vanilla. Currently signaling, you know, hash rate slowing down a little bit, and they go into that in much more detail down here and sort of look at who created this indicator and kind of the inverse to the cycle top. You know, when miners give up, it's possibly the most powerful Bitcoin buy signal ever. Certainly was the case in 2022, right? In early 2023. So this is another good one to look at occasionally if you're trying to figure out capitulation type behavior in the market. The last few that are sort of semi-relevant, you know, as an interest, active addresses. In general, we have not seen massive upticks in active addresses over time. We've sort of topped out. For most networks, as you get layer 2 functionality, layer 3, layer 4, you're going to see less active addresses on chain. That's just a fact. So what we really need is active addresses along with, on the layer 1, along with some sort of estimation at activity on layer 2. Because as layer 1 transactions get more expensive, as was the case during the ordinal saga, active addresses are going to fall off. So as Bitcoin price rises over time, on-chain transaction costs are going to continue to rise, right? So unless you're seeing some sort of mania on an accumulation or trading side of things, the general populace using this as a transaction network is more than likely going to be using Lightning over layer 1. So unless we lock some sort of new layer 1 functionality, I wouldn't expect active addresses to really tell you much of anything going forward. You want to see these rising generally, but holding within the range to me is perfectly acceptable. A lot of this, by the way, is also miners. So something I've never seen is looking at active addresses of known miners and like subtracting that, right? And just seeing the quote unquote economic activity, transactional type stuff, right? Taking out the miner rewards transactions or something, right? Just massaging it a little bit or curating it a little bit. Maybe gives you a better picture. They do have some Lightning stuff on here. You can see Lightning capacity dropped off recently. To me, not super important. Maybe as the Lightning network grows over time, it's still quite small, between 200 and 250 million. It's something to watch down the road. Now, as far as trading, again, looking at Bitcoin open interests, derivatives, they break this down in case you are curious, what open interest OI refers to. I don't use this myself anymore. I know people like to look at this stuff a lot. I think a lot of this is just mainly fake, especially on Binance, Bybit, OKEx. So it's useful to a point. The idea here is if open interest is at some peak, some maximum, there's a more greater likelihood of some sort of market event just to cull that open interest. CoinGlass has more history than just dating back to 2022, and you can see examples of that there, but I don't use this too often. I think the funding rates are more valuable. In general, during the end of bearish periods, you see a crescendo in negative funding. That means shorts are paying longs. During a crescendo in bullish periods, you see extremely high positive funding. That means longs are paying shorts. And eventually it just doesn't make sense to hold your positions open if you're getting reamed on the funding side of things, right? So you're less likely to hold a short open unless you're highly convicted we're going lower if funding rates are extremely negative. A great example of this right now is what's going on with Binance. You're still seeing funding rates extremely negative. So open interest very short on that side of things. For Bitcoin, on average, right, you can look at the different exchanges here. Essentially in the middle of the road, kind of zeroed out. Nothing too exciting. So that's all I have for this one. Again, best free resource you can get for Bitcoin. For most people, this is going to be good enough to satiate information and curiosity. Stack sats, stay humble. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.